market just wanted to see an adjustment where they're not continually nailing us with 75, 75, 75. And so that was kind of the relief. Okay, we're on now the downshift of the mountain, right? Instead of 75, maybe it's 50 or 25 in December, which is, by the way, just coming up in a real fast amount of time here. But I think also you look at it and say, okay, does the acceptable inflation rate, does that need to change? And the answer is, yeah, they're going to move the goalposts. That's what the Fed has always done, right? I mean, it was initially that this was okay and now it's not. And then, they're just going to continue to do it. And it's one more step to the long-term, negative outlook, in my opinion, for the US dollar, where even though they won't go back to printing money in the near term, there will be a scenario economically where they're forced to, or at least they'll make the excuse that they need to. If we flip over to the chart here, we can see clearly that 88, 86 level came from this channel, right? So we were stuck in this longer term channel. Every time we got to the high end, we would then get pushed down to the low end. And that's really where that level came from. Inclusive of that was this long-term trend line going back all the way to 2015. So that was kind of the bullish side of it. And then in addition, you know me, I'm a contrarian, Paul, and everyone was hating on this stock when it was in the 90s and in the high 80s. And for me, that's like, okay, well, if everyone hates it, then anyone who was going to sell probably already sold, which means there's probably no one or minimal sellers left, more buyers on any sort of positive news. And what did we get? We got a thing saying, okay, we're going to see layoffs here, which is cost cutting, which is exactly what the market just needed, a bone from Mark Zuckerberg, right? Yeah. They just needed some recognition that he wasn't really driving the company into the ground. And here he's showing some fiscal responsibility, which we wish the Fed would do kind of too, but
Yeah. Well, I think, and this is the situation that a lot of people are talking about. We'll get to it a little bit in the sense of how will Silicon Valley and the VCs kind of weather the storm of what we're seeing in the blockchain space, obviously on the kind of the aftermath of what's happened here with FTX. I want to jump over to this tweet. Fed is still sticking to its labor.
Roll over into the jobs numbers yet, but there's no doubt in my mind it's coming. I mean, again, you mentioned Meta, but I mean, you could go down a list of some of the biggest companies out there, and there's almost every one of them, 10% of the workforce, 8, 11, 12, 13%. They're all laying off, right? And again, we have to look at it in terms of reality. We know that the economy is slowing and the Fed is causing this by hiking rates, right? Which makes monetary policy more restrictive to slow the economy and bring down inflation. So it makes perfect sense that we're going to see a slower economy, and these companies realize that and they're starting to lay off. So to me, it's we know that the jobs numbers are a lagging indicator, and at some point it's going to come to fruition. And again, it blows my mind that the Fed, I mean, they just want to hang on to this kind of alternate reality of saying, oh, the jobs market is great, but they know what's coming down the line here. And to just be saying it's great and kind of lying in a weird, it's not really lying, but it's kind of not telling the truth either, that, hey guys, basically the writing was on the wall that we were going to head lower. And the question is, how low are we going to go? And you could see this channel here, if we connect these lows and drag it up to these highs here, this was a bearish channel. I mean, when you have a drop like this and price consolidates without breaking to the upside, it inevitably breaks to the downside. So to me, this is the next move to the downside. Now, what's interesting about this is I do look at it as the beginning of the last move down, meaning that wherever we bottom out here is likely the bottom in Bitcoin. A couple things, and this is going to what I was talking about in the video that I wanted to reveal, is that basically when I look at FTX, I see Lehman Brothers. And I haven't heard anyone else drawing this comparison. But if you look at the power that Lehman was in that time as one of the major banks and where FTX was as one of the major exchanges, both of them failing make a lot of sense as being that catalyst. Now, what's fascinating about this is if we go to the S&P 500, right? And I'm going to go all the way back here. We're going to go all the way back to 2008. Bear with me as I get there because it is quite a ways back. But if we go all the way back, what we can see is that when Lehman Brothers occurred, all right, this is where it occurred right here.
Yeah.
You can see that the S&P was not at a bottom. So it wasn't the bottom, but it kind of created that last drop in the markets that brought us to the low of 2009. To the low in 2009 of around 600 and change. So 40 to 50% decline. So then if we map that over to the crypto markets and we go to Bitcoin here, what's fascinating about this is that you basically take a 50% decline from about 18,500, which was the break point. And if you zoom out, there's a long-term trend line going back to 2017 before the bull market to the 2018 lows of the bear market to the crypto low. And where does that trend line go? Basically to that 40-50% decline. So for me, I start to put the pieces of the puzzle together and say, okay, this cycle, again, not quite the same as past cycles. This will be a little bit of a bigger correction, which makes sense with the Fed and with what's going on with FTX. But again, you can kind of start to see the similarities developing in this environment versus what happened in the Lehman Brothers collapse. And I do think it's very, very similar. And remember, it's similar because greed and fear are what rules investors, right? It's not, there's no fundamentals. It's greed and fear. Fear drives it to the downside. Greed drives it to the upside, to the crazy extremes. And so the Lehman collapse created the same type of fear that the FTX one is, which is people drawing out their money from exchanges and so forth. So it's kind of cool to think about it like that. But then that's, to me, what I'm expecting here. I think this is the final drop, and I think we'll bottom in the next 5-6 months. Right? I mean, when you have these institutions, number one, the biggest thing for crypto right now is that when you have big institutions that get burned to the tune of billions of dollars that they invested in FTX, they're not going to go invest in more crypto projects until we get regulation and transparency. So right away, that just shuts off that door to the rest of cryptocurrency. And that's a problem, right? I mean, it's going to stop innovation in the near term. It's going to make it so hard to raise any capital until we get this regulation out there. So I think overall, he's right in that it's going to cause more pain. There's no doubt that it's just the tip of the iceberg in terms of other, hopefully no one any bigger than FTX, but there's going to be other bankruptcies. And I think if you look at the dot-com era and compare what went on there, you have to expect a lot of these smaller cryptos to ultimately get flushed out and go to zero. Again, in the dot-com era, we saw the same sort of greed driving some of these companies that had no reason to go up to, $100 million valuations or greater go up, and they had to be taken out. And I think that's exactly what we'll see here in the crypto market for the next 3 to 6 months. Where the economy actually is going to suffer the most will actually be where Bitcoin flips and starts to become a safe haven for assets. And the reason it's going to flip is because you're going to start to have a lot of investors looking at the economy getting worse and worse and worse, and they're going to start giving up on stocks like Apple and Microsoft and these other ones as the consumer just runs away. And so the question is, well, where do you put your money at that point? And this is going on the assumption that we do have regulation and transparency within that period. But I do think that once we get that transparency in the crypto market, smart money, billionaires, they're going to start moving towards Bitcoin. And I actually think in that second dip, Bitcoin actually outperforms. I think that the high on the dollar is, at least for a while, the highest point. And I think that we will see bounces. I don't know if it's going to be on the PPI number or other things. The Fed, I could see jawboning and trying to keep pressure. And this is, by the way, this is another thing that people aren't talking about, but the Fed doesn't want the stock market to go up. And to look at this rally, they're probably thinking like, okay, now we have to talk more hawkishly than we were intending because we can't have the stock market keep rallying. The wealth effect makes people obviously spend more money and drives prices up when it's supply and demand. So I think that's the key there, is that the Fed is going to try to keep the lid on the markets. And then I think also you'll have to look at the factors involved in these next couple economic statements. But I would guess that the dollar is probably at a short-term peak. Bounces, yes, but I think it's going to head lower. And by the way, I don't think that that's actually a great thing. I think right now the market's been craving a weaker dollar, but there will be a point where a weaker dollar is really, really bad because it's going to tell us that the economy is in tailspin.